Hi, and thank you for joining us for the third and final professional lecture series presented by TCU. My name is Mary Lynn Wise, the Executive Director of the PHM Education Foundation. Today, we welcome two TCU representatives who will share financial strategies as our community navigates layoffs or cutbacks because of COVID-19 and how to balance the upcoming holidays into our budget. Welcome, Chris and Jeff, and thank you for being here today. I know that you have a wonderful presentation and I look forward to it. So with that, I'm going to turn it over to you.
Thank you, Mary Lynn. And again, my name's Chris Griggs. I manage 2 locations for this amazing TCU that I work for. Love my job. I'm excited to be here today. I think Jeff and I have a lot of great things to share with you.
And I'm Jeff Sobieralski, the Director of Financial Wellness and Wellbeing, and I am also looking very forward to sharing with you today.
And so I'd like to begin by saying thank you to the PHM Educational Foundation, and thank you, Mary Lynn, for asking us to do this. I mean, what an honor. And I'd also like to thank Dr. Thacker and the PHM school system and the parents.
Yeah. And Chris, if you don't mind, before we start getting into the whole presentation today, I kind of want to kick off with a word of warning for those that are watching the presentation, if that's all right. I'm a father of 4 wonderful children who tell me very often that my dad jokes are pretty lame. So try as I do, I can't help but sometimes have a few of those in my presentation. So that's my disclaimer, and I'm ready to move on.
Thanks, Jeff. So basically what we're hoping to accomplish today is to provide a few ideas and things you can take from this presentation that may help you. We start off by discussing our environment in the pandemic and the impacts that's had on budgeting for all of us. We know that times right now are tough, and adapting to the major changes in our income can be awfully stressful. And so we'll discuss some of the tools, tips, tricks, behavioral tricks that we've seen others use that can have a positive impact on your financial well-being. And then we hope that we will be able to share some resources that will increase your financial awareness and financial well-being, and maybe help to reduce some of the anxiety or stress that you're having right now.
So speaking about financial well-being, one thing that I've noticed from this pandemic, it has appeared to create like the perfect storm, if you will. We're now at this point where we have to social distance from our friends and the rest of the world, and it seems like it's getting worse again. Unessential businesses were shut down and slowly back opened. Unfortunately, some of those businesses are not going to open ever again. We're not really able to gather for big celebrations. Sometimes it's hard to attend funerals to say goodbye to some of our friends or loved ones. Basically, the pandemic has left many with reduced income. It's making it very hard to cover, the basic expenses. And some people it's left with no income, which can be more difficult. And then not only has the pandemic, started impacting the world in and of itself, it's also added to all of our stress in different ways. And then add one more thing to this challenge. We don't even have a full picture of what the future of this is even going to look like. And that's pretty scary in and of itself. I was reading a Gallup poll the other day, and it stated that, a record high of 44% of people, of adults, say that the financial impact of this pandemic is actually starting to get a lot worse. And up to 7 percentage points in 1 week is what it reported, with only 24% of them saying that's even, just getting a little worse. And then on top of that, a lot of people believe this pandemic is going to go on for a while. And so while many of the respondents in the article said that they're going to hold out for a vaccine, and they're going to try to do that, before they go into any day-to-day normalcy that we're going to see.
Right, Jeff. And now on top of all of those things that you're discussing, finances and money is already an emotional topic for many of us. And for many people, we ignore discussing our finances and go on day to day. Many of us just avoid having conversations about the finances and money because of the anxiety. It's no wonder when you look at some of the studies available that the average American generally has huge amounts of debt. According to a report from Experian in 2019 consumer debt study, the average person is in debt $90,460.
Ooh, that is a lot of money. That is
right?
a lot of money.
Right. And then we add to that, so many of us live paycheck to paycheck, and we're lucky to even have $400 in a savings account to cover some unexpected expense.
And the sticky part about that is usually you got to borrow for it to end up paying it off, like from a credit card. Or some of us, skip one bill just so we can pay it this month, hoping to catch up the next month.
Right. And what we often forget is that money is a tool. And if you plan accordingly, money and finances, it doesn't have to be a topic that causes us stress and anxiety.
Well, unless you got chromatophobia. So, sorry, that's one of those dad jokes that I mentioned earlier. Chromatophobia is the fear of thinking about money.
Okay, Jeff. All right.
Sorry.
One thing I also want to mention is that this anxiety we have over our finances often impacts more than just our financial well-being. It can carry over to other areas of our overall life, like physical, social, community, and other career well-being.
Again, since you're talking about well-being, I was reflecting about the presentation for today, and I thought I should point out, that talking about this pandemic, it really should serve as a reminder, a reminder of to all of us that there's always going to be another financial crisis, and it should also remind us that with another financial crisis, the next one's not going to be the same as the last one.
It's a good point, Jeff, and which brings me to the next piece of advice. It's important that we begin thinking about giving ourselves a financial cushion for the future. And a financial cushion should give us some wiggle room for mistakes or things like the pandemic, this thing that just came into our lives, and room to absorb those curveballs of those unforeseen circumstances.
Yeah, kind of like a fuel pump going out in the car, or the water heater, goes out and needs to be replaced, or my child has to go to the emergency room on a quick visit.
Exactly, and we've all had that. But if we have a financial cushion, finances and money can begin to feel more like the thing or tool we use to manage our lives rather than that managing us.
Additionally, a financial cushion, it basically helps us to decrease our stress and our anxiety, while at the same time, helping us to increase our financial well-being and our overall well-being.
Right.
Sometimes when I'm talking about well-being, financial well-being, or being financially empowered, there are people out there that think that the only way I can ever have that is by winning the lottery. It's almost like you got to be as rich as like Bruce Wayne. If you don't recognize that name, it's Batman. And Batman, he's got tons of money. He's got the Batcave. He's got the Batmobile, the Batjet, and all the gizmos that money can go out and buy. And just so I don't offend anybody, if you're a Marvel fan, some people think that being financially empowered or having a high financial well-being is like being like Tony Stark, who's also known as the Iron Man, with all his skyscrapers and all those gadgets too.
Oh, Jeff, those are some great analogies.
Sorry.
Okay. And what we hope to have everyone understand is that financial empowerment and financial well-being, it's not about the amount of money you have. Instead, financial empowerment is how you handle the money you have.
Right. It's a person can have great financial well-being without being substantially wealthy or affluent, because it's really about the perception that you have towards the money.
Exactly. And financial empowerment is it's about setting yourself on a path to financial well-being. And financial well-being is about our emotional relationship with our money and the things or experiences that the money buys us. It's about how we feel about being ready for unplanned events and having resources available to push through those.
Yeah. So financial empowerment means, not saying that I can't afford to say eat out, but instead you're choosing to say, you know what, I choose not to spend money on eating out right now. I have a friend yes, Chris, I have a friend. I have a friend who I was talking to the other day. He's been working at TCU for, I'd say, almost 30 years now. And he was sharing with me about some of the financial habits that helped him out through some of these tougher times. And basically his motto that he shared with me was live for today, but plan for tomorrow. And the point that he was making that he wasn't going to eat ramen, for example, three meals a day just in order to save, but he also wasn't going to eat out for every meal either.
Right. And, that brings me to the next point. Financial empowerment and well-being can be within reach no matter your income. And that's because the beginning steps don't start with dollars and cents. The beginning steps start with a mindset shift.
Exactly. That's it. It's really about our attitude towards the money. And although you decide to take charge of your finances, just remember that it's not going to be a cure-all for all challenges, but it should help you to see what's within your power to control.
Right. Mhm.
So really, to begin empowering yourself, you got to have a plan. That's that cushion that Chris was just talking about a minute ago. Most people, that are really good with their finances, they're going to tell you that the first thing, or one of the first steps to be prepared for a plan is going to, during those like lower income periods, it's going to have you need to prepare for an adequate emergency fund.
Right.
The whole point of that emergency fund, you're planning to set aside money for the essential expenses that absolutely have to be paid.
Right. And the nice thing about an emergency fund is that it can help you reduce your stress and increase your peace of mind, knowing that you have the funds to be able to pay those bills and meet your needs, even if your income drops unexpectedly or you have an unexpected emergency. And we all have those. And you can do this without increasing your debt on top of it. And you're under enough pressure with everything that's going on in your life if your income decreases. So an emergency fund can give you time to focus on looking forward or adjusting to newer budgets.
And the point of the emergency fund too, you also want to try to make a good goal of having about 3 to 6 months of expenses saved up in your emergency fund. That's usually where people will tell you is the best beginning.
Right.
And then to our next point, no matter how much money that you make, you can't maximize its potential until you've got a vision or a strategy, which basically entails the big B word, budgeting. A lot of people think that budgeting is about stopping you from living your life, or that a budget is somehow going to limit you around the money around your life. But really, it's not at all what a budget's supposed to be about. It's supposed to be simply about understanding the flow of the money that you have coming in and how much you're paying out. It's about putting your money to work towards your goals, towards your budget, and having a clear picture of what your financial situation is. And I realize that, here we are talking about budgeting right now. And I know that prior to this, before this pandemic, a lot of us, feared that one financial catastrophe could just spin our finances out of control. And then, bam, here we are. The pandemic hits us.
Yes, and we've spoken to so many members regarding how this pandemic has impacted them both personally and financially. And really, there's no sugarcoating this, because we will likely see many more months or even seasons of this pandemic continuing, as much as any of us hate to say that or admit that. And what's important to remember is that we have to push forward and improve our situation, continue to work on our budgets, because your budget is even more important now than it ever has been before.
Right, and as we mentioned, a moment ago, the key to that budget really is to understand that flow of funds coming and going, as well as knowing, the goal you're working towards, whether it be a weekly goal, monthly goal, quarterly goal, semi-annual, annual. Basically, you're going to track all those incomes and spendings to establish the financial goals, and you're really doing this based on the facts. What you don't want to do is just use the guesstimates in your head. So you want to develop a budget, because it's one of the best steps, to living within your means and building that cushion that we've been talking about.
Right. And of course, with your budget plan, what you don't want to do is you don't want to sit on your hands and do nothing. Sitting on your hands only adds to your stress and uncertainty.
Absolutely. And you know what? It's sitting on your hands. It's very true. It does add to stress. And you know what? I also know that, budgeting is challenging, but when you try to stick to them, they do work. So, we always say, stay the course. We also know, from experience, that you're not gonna get it right every time. It's like walking on a balance beam, so to speak. When you start walking on one, it can be kind of difficult, and then you lose your balance and you start to fall off the thing all the time. But the key is with even the balance beam, the more you practice it, the better you are, and the longer you stay balanced on that beam. So with a budget, you don't just want to make one on paper and say, well, that's done, I got it, I'm moving on, and then you put it away. You got to stick with it. You basically have to make adjustments along the way to keep your balance, both like you would on that beam and in your finances. Sorry, bad joke. It sounded better in my head. Anyway, the point I was trying to make there is that you try and stay the course.
I agree, Jeff, and I also agree that was just a bad balancing joke, but
Sorry.
you did warn us. You did.
I try
We're not
to.
going to spend a lot of time focusing on different budget types, but we will share a couple of examples, and we'll focus on some behavioral tricks that might help you to save. And for those of you who already began budgeting and are pretty good at it, maybe some of these things will help you be even better. You want to begin your budget, first of all, by looking at the bare bones needs. You must know the bare minimum expenses that you need to cover on a monthly basis.
Oh, there goes my phone. Sorry about that, guys. And yes, for the most part, or most people, this is going to include all the main essentials like your housing, your rent, utility bills, transportation, groceries, things of that nature.
Right. And it's also crucial that you know absolutely what you need to earn in order to pay those bills. Then grab a pen and paper and create your list.
At one point you're going to want to keep in mind too that some of your bills are going to fluctuate monthly. Like those utility bills, groceries, or if you're still commuting, gas, it's going to change each month.
Mm-hmm. And you then want to add your savings, investments, and debt repayments in, and there you have it, basic budget plan.
Yeah. Don't forget though that you're going to need to account for other expenses that you're going to have at different times of year. We mentioned we're getting ready to go in the holiday season here, or birthday gifts, things of that nature.
Mm-hmm. That's a good point. And what you're going to do next is you're going to plug in the information you just gathered into your budget plan.
So one of the more popular budgeting plans that people use, they call it the 50-20-30 or the 50-30-20, depending on which order you want to look at it. But basically what you're doing is you're spending roughly 50% of the money that you make after taxes on what your needs are, those essential necessity things that you have to have. Then you're going to take about 30% and of that, and you're going to put it towards your wants, those indulgences that aren't something that you have to have. And then the last 20% you want to try to put into savings or paying off debts.
But let me add that before you begin worrying about that 30% wants category, that may be different for everybody. And some of us may be at 0% for that wants category. This is just one example of a popular budgeting tool.
Exactly. And remember, really the focus of this thing is to keep your goal going in your budget. It's to help you reduce the debt and to sock away funds for those unexpected times that you'll have those expenses, and really to keep your occasional indulgences that they're still within reach, because what you're trying to do is hopefully reduce some stress during this time. So that's just one example of a type of budgeting plan. So really what we want to do is start to get into some tricks, some of the behavioral tricks that we use. For example, one that's been really useful for me and my family is this zero-sum budgeting. Basically what this type of budgeting trick does is it kind of like hides some of your money from you every single month. So what you're doing is you're taking this zero-sum budget. This is your income, your expenses, and you're making everything kind of even out by the end of the month. There's nothing going to be left over. So you're putting in the income, you're subtracting all your expenses, and then boom, you're all the way down to zero is the kind of point that you're trying to do. And sorry.
Yeah, go ahead, Jeff.
Okay, so really with this type of budgeting, what you're doing is you're kind of like setting up different bills or different accounts that you're planning to save for. Of course, you want to set up an emergency fund or an insurance account, which I'll talk about later. Something what I've done. You can set up even a new closed account, and then basically what you're doing is you're assigning amounts that you owe to each one of those accounts. All right, every time you get a paycheck in, boom, this much goes here, this much goes here, this much goes here, and based on percentages. And then you're putting enough into those accounts that you have in there that you can save and pay those bills off, either monthly or whatever your goals are.
Right. And one thing to keep in mind, Jeff isn't saying that the balance in your checking account should be zero. He's just saying at the end of the month, your budget should show zero left over.
Exactly. Thanks for pointing that out. So really, again, the trick here is that you're treating your savings goals as expenses, kind of like a regular payment that you would make in the same way that you're paying those bills.
Right. And one thing you might want to be careful of here is that some of us will be tempted to pull funds from our savings during low income months. It's something you do not want to do because you can throw your whole budget off in multiple areas.
Right.
So another behavioral tip is to try seeing if you can put some of your savings into higher yielding savings accounts. The hope is that before you pull the money out, you'll stop and think about the money and what you'll lose by dipping into the savings outside of your budget.
Right, because if you're earning a little bit more in the dividends, a little bit more that you might earn monthly, you don't want to get into that. Absolutely.
Exactly.
So one of the ways I was able to take that whole zero-sum budgeting trip into action is I take all my income, I deposit into one account, which for me is my checking, and then what we do is we make payments into the separate savings accounts through transfers into each one of those accounts.
Right. And Jeff, I know that works for you to use those multiple savings accounts, but there are a lot of people who like to use the envelope system where they earmark envelopes for saving for different goals.
Sure. I'm very familiar with that one too. But for my family, instead of using the envelopes at home, we just found it easier to locate transactions faster, utilizing the online banking. So for my family, it's basically it's a better paper trail. There's one of my bad puns, sorry, but it's just a better paper trail.
Oh, Jeff.
Sorry.
Okay.
Anyways, so we were able to specifically name our savings accounts, which was really nice because each one has a different goal, as I mentioned. And, naming each one of those goals, each of those accounts, I found personally was a good practice because you really kind of view that account differently. Kind of like Chris said on that last slide there, it's much harder for me to want to take money out of my emergency fund than it would be for me to take money a little bit out of my new clothing fund or something like that if I have a small wants-based purchase. So keep that in mind too. This zero sum budgeting trick here, it really helped my family save actually more than we would have otherwise, because it really kind of forced us to look at our spending a little bit more critically. And so when we wanted to save more, we just basically we tightened our belts and looked for expenses to cut out of that monthly plan that we just created. And another tip I'd like to share is that we found out a few years ago that some companies really they offer discounts when you pay ahead. For example, I was mentioning an insurance savings account earlier. We made an insurance savings account so we can save up a little bit more, so we can start to pay our premiums all at once and get that discount. So originally how we were doing this, we're paying our insurance premiums monthly just to keep it within our budget, and then we were putting a little bit of money aside. And as we put more and more aside, we were able to save up enough to start paying it semi-annually and got a discount. And then finally, we saved up enough to pay the whole insurance annually. And this gave us really a nice size discount, turning around, freeing up funds to put towards other expenses. And so now we just put a percentage into that insurance savings account from each paycheck instead of, pulling it out of the regular checking account, and we're prepared for next year's premium.
That's a great idea.
Thanks.
And so we've mentioned a few behavioral tricks. So let's talk about a couple more. Jeff mentioned multiple savings accounts, and naming them helps us earmark the funds for the budget.
Mm-hmm.
Another tip is what I like to refer to as out of sight, out of mind money. Setting up an automatic transfer can help us avoid spending unnecessarily because the funds don't even appear to be in the account to spend in the first place. So and I do this, and when you have a regular systematic deposit, like a payroll, and once the funds come in, you have a portion automatically transferred to another account.
Right. That example I just mentioned regarding that insurance savings is probably a good one I can share with you guys too. When we started planning to save, we decided to automatically transfer, I'd say it was about, if I remember correctly, $30 biweekly into that savings account, just so we could get in the habit of not seeing that amount in our checking account. And although we're, still paying that premium from our checking account, we had that other part saving up for that annual premium, and it wasn't part of the amount we were looking at. It was that, as you just said, out of sight, out of mind for us.
Right. And another tip to think about, it's when you receive any type of salary increase or extra funds or tax refunds, those type of things, instead of splurging, because I deserve to splurge, put it into a retirement account or a savings account. And just remember that you've been living on a current budget for some time. Try to continue living on that budget and put more money into savings.
To point something out, Chris isn't saying that, you can't splurge or indulge once in a while. Really, the point of what she was making was that you want to take the majority of the funds and put those away. I still think it's okay once in a while is to take just a small portion and celebrate with it, because as you start to hit little goals here and there, it really helps, keeps you on track.
Mm-hmm.
Yeah. Another tip to think about too is those what we call roundup savings. Basically, this is like for those people who don't like to carry cash. You know, you can use a roundup type of savings program that helps you put a little change here and there into your savings or into another type of account. And then, you know, we were so used to getting change from our cash. A lot of people put them into like piggy banks or jars or the old ashtrays in the car. And so now what happens with these for people that are debit card users, this is like a virtual piggy bank, you know, or a virtual bottle to put your change or cup. And this is for the heavy debit card users. So you swipe your card, your purchase rounds up, the merchant gets paid, and that rounded up change goes right into the account of your choice. And I do have to add a caveat to that though, that if you're using that zero sum budgeting tip, roundup savings is probably not going to be the best thing to work because, you know, you're already accounting for every penny that you're using.
Right. And here's another great tip. If you know ahead of time that you're going to have a big ticket purchase, just plan for it.
That's a good point. Again, I usually recommend, you know, establishing like a separate savings account or a separate account that you can plan to put it in there.
Or envelope.
Yes, or envelope, and name it. I think that was a jab at me, Chris, thanks. Another advantage of having those separate savings account that you can see, you can really, you try to see how close you are getting to that goal, which kind of brings me into the next tip too. Sometimes when you look at the percentage of how close you are to your goal, it can actually help you obtain it faster. As my wife and I talking about that insurance account earlier, when we got closer to that annual premium for our insurance, we started looking for ways to put more into it. This was beyond that automatic, you know, $30 every couple of weeks that we set up as the automatic transfers. When we started getting, I'd say probably roughly 80-85%, it was almost like we were like, oh man, we're almost there. You know, we decided to go all in. We started, you know, finding every little penny we could put into that account just to squeeze it in there and be done. You know, as cheesy as it sounds, we really were getting excited knowing that we were about to hit what we considered a milestone. Not obviously a true life milestone, but for us, it was a goal in our budgeting process that we were really getting used to, and if it was just, it felt like a milestone that we were hitting, and really it gets exciting, you know, the closer to the goal that you are, and so you know, it just takes just a little bit more effort to just nail it down.
That's so true. And if I can add, I recommend setting smaller goals to establish the habits. Then you start to achieve your bigger goals.
Right. We started with that whole, you know, we want to try to hit that semi-annual premium, and then we went after the premium. So that's a really great point that you made there too.
Mm-hmm.
Also, you know, when you're preparing your budget, you got to remember to gather all your financial statements over the past year, which at first sometimes we forgot, but it includes like your credit card bills too, because you know when you look at the statements, your credit card statements, stuff like that, you're ensuring that you're not missing anything from your budget. When you're reviewing your monthly bank statements, you're also watching out for fraud, and so basically what we did is we looked at every single month of our bank statements and went through the credit card bills, and you know, I have to tell you that when we started looking at the credit card bills, you know, it became a little bit more painful because I started seeing, even though we were paying this off, you know, monthly, how much more I could have been saving. It basically gave me an opportunity to put myself on a spending diet. And so in my case, after my wife and I reviewed our credit card budget about 3 months prior to this pandemic, my wife decided to, we decided to put me on a fast food eating out spending diet. And it's nice to say, though, that this spending diet not only saved us a lot of money, but this diet, the spending diet went hand in hand with me losing almost 15 pounds. So if you want to talk about, you know, financial well-being being affected by, affecting, you know, your overall well-being, that's one way to look at it.
Wow, Jeff, that is awesome.
Thanks.
Seriously, it is. And you know, one thing you also want to remember while you're reviewing the statements, search for any reoccurring expenses that you either don't use or don't need, or things like a subscription or a gym membership that you thought you'd use and you never did. Those things can nickel and dime your budget too.
You know, that reminds me, a few years ago, we decided to kind of look at, I don't know if I'm allowed to say this, but our Amazon Prime subscription to see if we were really saving money on the shipping. And of course, we reviewed this again here pre-pandemic. We discovered that, you know what, there was a few years ago, we discovered there was a family plan with Prime, and you can actually have a bunch of family members into that. I don't know if they still offer that, but that was a nice little thing that helped us to save some money too.
That's pretty good, Jeff. I didn't even know that existed, but
Thanks.
So I'd also like to recommend developing a system for organizing your financial records, items like receipts, pay stubs, tax records, banking and insurance information, and any other documentation that affects your finances. And remember that your system should be kept secure but accessible.
And I'm assuming you mean by secure and accessible, Chris, you're probably not referring to a shoebox.
Yes, Jeff, not your shoebox. Remember to use credit cards only when absolutely necessary. That's another tip. Try to pay off the balances every month and know what you owe.
Absolutely, because if you do have an emergency, what you want to remember that your plan should be to use the emergency fund so you can avoid borrowing more, because it's really difficult to get rid of debt quickly.
Right, and the good news is that you can create a plan for paying it down, and it's in a way that fits your budget that helps to reduce the amount of interest you'll pay.
Of course, yeah. And you can also, get that debt under control because you'll know exactly what you owe and what you're paying back or not paying back each month.
Right, and not knowing what you owe, it probably means you're carrying way too much debt.
Oh, yeah.
And since we've mentioned credit cards, your credit score is another critical part of your financial well-being. Late payments, high balances have major negative effects on both your stress level and your credit score.
Oh, yeah.
And if you know there's a chance that you might be missing a payment, contact the merchant to see if you can make arrangements or what options they may have that will have less of a negative impact on your credit. And don't be afraid to ask the merchant for advice. Do this as soon as you know that you might be late. Because if you wait until the last minute, you only are adding to your stress level. So call immediately, explain your situation. It's possible there may not be a lot of options right away, but there may be ideas for the next payment. Or here's an idea, you may be able to contact another merchant who you planned to pay to see if they may have some resources for you or some options. And then maybe you can go back and pay the original one that you thought you were going to miss.
Yeah, and if I can add a personal recommendation here from another experience that I had, if you find that you have to make one of these kind of calls, really try to remain as courteous as possible to the person on the other end of the phone, because most people, although they'll emphasize and they'll try to find ways to help you, I know that there's sometimes those people that just, when you're speaking to them, they don't appear empathetic or even reasonable. And I recommend that you just simply thank the person and tell them to have a nice day. What I'm not, what I want you to understand here is I'm not really trying to condone, poor behavior of somebody on the other end of the phone. I found personally that it's just easier and less stressful on me to speak to somebody who's going to be a little bit more reasonable and who cares about helping me. Because if you're anything like me, unreasonable people they have a way of getting under your skin very quickly. And as we've been talking about through this, you don't need any additional stress from someone who maybe they're appearing to pass judgment or condemning you, or just, they're unwilling to even try to help, especially, that you're trying to do the right thing. You're trying to own that financial challenge. So I recommend you move on and talk to somebody who's a little more reasonable. And one of the things is it might be a good idea, you take a few deep breaths before you try to call back, or even go for a walk. So sometimes that helps, I found.
I think that's a great recommendation, Jeff. And it's important to remember that there are times when we may feel the burden of debt dragging us down from our financial progress. And if you have more than one source of debt, sometimes you can save money by consolidating those debts into one or more manageable pieces. And this often helps to reduce your stress, adds to your peace of mind by freeing up some of your money budget to help focus paying down the debt faster.
If I could add a word of caution here too, though, is that when you think of consolidating your debts, don't think of it as a one-size-fits-all solution. When it really comes to debt consolidation, it's really important to look at all of your options. And I always say seek advice.
I totally agree. And another thing to think about with debt consolidating is to try to do it when interest rates are low, which right now appears to be a great time for many people because we're seeing historically low rates with the pandemic.
Mm-hmm. And also, speaking of consolidation, my wife and I actually had an unforeseen financial oopsie, if you will, that turned into a blessing in disguise for consolidating. After I had graduated from Bethel College, Bethel University, we'd been paying on my student loan for a couple of years, and my wife was pregnant with our second son at the time, and we had to make a dash for the hospital because he was ready to come. And so while we were in a hurry, grabbing our bags and rushing to get into the car, unfortunately, some of my financial paperwork kind of shifted in the hurry, the scuffle. And so by the time I had dropped off my wife at the hospital, I dropped her off the door, parked the car, and as I was walking in, my son was being born within just a few minutes. And so, as you can imagine, the last thing I was really, thinking about was my student loan bill may have fallen behind my desk. And so, my point here is, unfortunately, when the next month's bill showed up and my oversight showed up on that bill, not only did they add a late fee on there, they also increased my interest 2% going forward, and I didn't realize that was part of the deal. And so I did try to contact the finance company. I'm not going to name names, and hope that they'd be willing to understand. And they basically responded to us that if we continued over the next couple of years with on-time payments, even though we had already done a couple of years, they would be willing to reduce their rate. Of course, they're not going to refund the previous interest or anything like that either. And of course, as you might expect, what I try to do, I try to call back, try to explain it to another person. Unfortunately, they offered the exact same solution. And basically, this person said, I'm sorry, my hands are tied. And the second person I talked to, she really felt bad. I could tell. So I know that, trying to call back again, it wasn't going to work. So basically, the thing is, before that, we didn't have late payments with them, and so I just thought the interest was already a little high on it anyway. So it kind of added some pressure for me to kind of see how I could adjust the budget. And so what we did is we started looking at the math. I got some advice from some of my financial mentors. We consolidated that debt and another high debt that I had into an equity type loan on our home. And so this equity loan was a huge blessing, because not only did it decrease our interest that we were paying or that we would have paid overall, but it took my payments and made them lower. Although the payments, were lower, we continued to pay the same amount it would have been if the payments weren't combined, but overall we ended up paying less interest, and we actually paid the debt off a lot faster than it was originally going to be finished. So, I mean, it really was a huge blessing.
Right. And one thing I know Jeff didn't mention is that he didn't take on any new debt when he consolidated.
Absolutely, yeah, no new debt there. Thank you for bringing that point out too. Really, the key with consolidating is that you want to remain strict to your original payment plan if you can. So I kept the payments the same amounts, and just because I freed up that money from the other monthly payments, it didn't mean that I can go on and take on more debt, because really, if we would have started doing that, we would have just been digging ourselves a bigger debt hole that was going to become even more difficult for us to climb out at one point in time.
Exactly. So another tip, many people like setting their bills to automatically deduct from their accounts. And this tip can be either good or bad, depending on what's best for you. It's good to be on time with your payments, because being on time can prevent interest hikes, late fees, again, affecting your credit score. But it can also be challenging if the merchant charges you before you thought they would, because the payment date was on a Sunday or a holiday, and the merchant only uses business days as an option.
Yep. And most people that do the automatic payments, they really like to set it up around their paydays. So if they're not prepared or expecting to have a payment shift because of a holiday or a Sunday, you're going to see that come out earlier. And if you prefer setting up automatic billing, and that happens, it can be very expensive. I have a lot of people that like to set that up. And so what I recommend for them to do is, use your financial institution's bill pay system. Almost all of them have them, if not all. When you do that, instead of allowing the payments to come out, directly out of your account, you're in control. You're the one who's stopping them from coming out. You're sending it to them.
So, and Jeff's right, that does keep you in control. So you can turn the automatic payments off easily. Also, some merchants may require weeks before they'll stop the automatic payments from coming out of your account, which can really negatively impact your accounts and causing lots of fees that you weren't expecting.
Right, and usually when something like that happens too, to Chris's point there, because I've seen some companies that are up to 6 weeks before they'll stop something from coming out of your account, and so if you have to do it yourself, there's usually some sort of fee associated with it for you to go in and stop it at your local institution, your financial institution.
Right.
Something else to think about too, one-click charges. That's a tip to watch out for. Even when you start looking at the smallest charges, they'll start adding up quickly. You really want to track where your money's going. One of the rules of thumb that my wife and I try to do is we try to give ourselves a 24-hour rule to see if it's, we're looking at something and we want to get it through like an online purchase. And if it's something online, we'll just stick it in a cart because we can always come back to it later. And those one-click purchases from some of these apps, you're thinking it's $1 or $2 here or there, but it really starts to add up. See, another tip before making purchases is determine how many hours that you work, how many hours you have to work in order to pay for the items you want. Let's say, for example, that you're making $15 an hour, and if you think about it as $15 an hour, it might take you 2 or 3 hours to pay for a pair of new shoes, to make that $30, $45, or in some cases 8 to 9 hours. It kind of depends on your taste. Here's a little
Jeff,
dig at you, Chris.
Jeff,
Sorry.
looking through my closets.
No.
Seriously.
You saw that coming. Okay.
Anyway, as we finish our last couple of tips, it's important to remember that with your financial plan, you will face obstacles. Life is full of the unexpected, and that's normal. And there will have to be trade-offs with the decisions you make.
Yeah. Yeah. And since anxiety and stress levels are really high for many people right now, and everyone handles, that whole uncertainty differently, again, I really recommend you kind of take a step back. And when it comes to having to have a lot of financial decisions coming up, just do one at a time. Because when you're faced with multiple financial decisions back to back, if you happen to be like me, your energy or your willpower, it becomes easily depleted. So when that happens, if it's at all possible, space out each financial decision instead of making too many at once. Because when you space those decisions out, it kind of helps you to avoid that overwhelming feeling, and then you don't make a bunch of bad decisions all at once.
And Jeff, that's just a great point. I think it's important to try to identify your personal financial stressors. Although thinking about those stressors may increase your anxiety in the short term, writing them down, I do that a lot, and identifying how to deal with them can reduce some stress.
That gives another great point. I know that when there's a large change that we have to make on my budget, I basically have to give my wife, who by the way walks on water, I have to give my wife some time to process the information. She might be listening. I have a tendency to make quick adjustments when it comes to me doing the budget, and those are generally often emotionally based, and I just want to get it done and over with. And so when I make those knee-jerk reactions, I'm a little bit more selfish, and of course my decisions generally impact the parts of the budget that she's generally overseeing. So so when we sit down and we discuss the best options, we found that not following those knee-jerk reactions that I have has really helped us to plan better and be a little more realistic.
That's another great point, Jeff. And it's also important to recognize that we must make adjustments to our budget as our needs change. If we find that something isn't in alignment with our plan, we just adjust, and we do not scrap the plan or ignore the budget altogether.
Yeah, that's correct. It's also important to remember that, budgeting is really a journey. You're going to set goals, you're going to achieve goals, you're going to adjust goals. You're going to do this all throughout your life. And if you're struggling to get a budget going, seek some advice. I work in the financial industry. I still seek advice when sometimes I can't see something that's right in front of my face at times. So seek advice from people, who understand finances and how budgeting works. Go to your financial institution, ask for help.
Yeah, getting that second opinion can sometimes just something that you're not seeing is huge. So, and another way to get your finances in budgeting together that I recommend is continuing education. What I mean by that is that you need to push forward by taking some financial literacy courses. It's never too late or too early, or to increase your knowledge, especially when it comes to the principles of effective financial management.
Chris, to your point, one time I was reading in this Cambridge study, I think it's probably pretty easy to find online, but in this Cambridge study, it basically said that most children by the age of 7, should know how to recognize the value of money and be able to count it out and things like that. And they start to begin to understand, how money is exchanged for products and what it means to earn money through working. So it's absolutely not too early to start teaching kids about their finances. I know in my house, believe it or not, we start as early as 3 with, I'm just talking about the wants and the needs and what that means. And, our kids, pre-pandemic could earn a little bit of cash here and there from us, and they would save it up to start putting to work for them.
Yeah, and I'm just going to add that younger people, that is a concept they get. Wants and needs, they get it.
Yeah.
And we've seen that in our presentations at some of the elementary schools, Jeff.
Mm.
So as we round out our presentation, I'd like to share a couple of thoughts and reminders. So remember, it's important for your financial well-being. You should have a financial cushion for times like these, which generally do require a budget. And you also want to remember, it's important to recognize that we must make adjustments to our budget as our needs change. And again, if you find something that isn't in alignment with your plan, we just adjust. Again, we do not scrap the plan.
Exactly. Yeah. It's also important to remember that, that, like I said before, budgeting, it's a journey. It's where you're setting, achieving, and adjusting those goals, throughout life. There's lots of tips and tricks, that we've been mentioning here, and there's plenty more that we haven't. But really, what's important here is to find out what's going to work best for you, and just to kind of continue down that journey.
Right. Yeah. It's not a one-size-fits-all thing. You figure out what works best for you. And as we previously mentioned, if you're struggling with getting a budget going, seek advice from those who understand finances and budgeting and how it works.
If you guys haven't noticed by now, by some of my comments, I'm not perfect at budgeting. There are going to be people out there that are going to be better than you, but I have to tell you, I refuse to stop learning. So that being said, I put it on the slide here, on our TCU website, we've got a lot of tools and resources there. They've got, budgeting and consolidating calculators, financial literacy courses, articles, blogs, and other resources. Something else you can do too is you can actually set up appointments right online, so you can try to get advice. And I know that web address looks really long. It's because we're doing something to make some construction changes. So where you see the letters, the VNU57IR, I'm hoping in the next couple of days you just replace that with the word plan, and it takes you to all the things that we've been talking here today. They're actually changing this presentation, or do this presentation, they're changing the website to put all these under one place, one resources for all the people that we're talking to today.
Yeah, that's fantastic. And one of the things that I'm most proud of about TCU is that many teachers are already using our financial literacy programs for many of the high school students in the PHM school system and across Indiana.
Mm-hmm, yep, and we also offer programs that aren't just for the high schoolers, but we also offer programs for middle school, for homeschoolers. We have programs for adults as well, and those programs, throughout each one of them, they're specifically geared towards each group of people, since we all kind of learn on different levels.
Right. And so one thing that we haven't mentioned is that these courses are free. This is how TCU partners with our communities and educators by offering ways to help everyone's financial well-being.
It's hard to think long-term right now, but, our current circumstances should really serve to highlight the importance of practicing these good financial habits. And when these habits are practiced, it really should help, provide that cushion we started off this whole conversation with when those unexpected things happen, as well as, hopefully help to, keep our stress levels a little bit lower than what they would be. Sometimes, and this is not going to be on the script or on the screen, excuse me. Sometimes the struggle is harder for some than it is for others, and and although it's not part of the presentation, what I want to do is just kind of share a couple of resources that I came across that I found helpful. So I'm just going to sidebar us for just a moment. I know that we're starting to get close in our time, but I know many people they're familiar with United Way assistance by dialing 401 on our phones. That's one option. But another resource I came across, and this is about a month ago, is a website called findhelp.org. That's findhelp.org. I couldn't believe when I came across this resource, the number of programs in our area that are available or could help you if you're struggling in some area. It's not just financial area. I mean, it is all kinds of things. And what I did is I just went to that findhelp.org website. I entered my zip code in, and there was literally hundreds and hundreds of programs to help people that were struggling. So thanks for the sidebar. I just kind of wanted to share another resource that I came across.
I think that's great, Jeff. And so before we close out, one more thing I think that's important to express is that we at TCU are here to help. Again, partnering with our communities, that's what we do best. And we're here to try to help you navigate through some of the challenges and to provide guidance toward achieving your personal financial goals. We encourage you to take advantage of the free online tools that we've provided and to contact one of our team members for assistance. So, I mean, let's face it, many of us are facing immediate challenges and uncertain futures. So we're really hoping that these digital tools, along with the tips that Jeff and I have been talking about today, will help some of you feel more in control of your finances. Even with so much uncertainty, we recognize the difficulties ahead, and we're here to try to help. After all, TCU was founded during the Great Depression, and to help people in economic distress, which is still our mission today of people helping people.
Absolutely.
So I just want to thank you all for your time today. And if you have any questions, please feel free to contact us and let us know.
Yeah, absolutely. Thank you for your time. Thank you for this opportunity to speak to you all. Thank you so much. And thank you, Mary Lynn, for inviting us too.
Great.
Thank you, Chris and Jeff. And I just really appreciate you guys breaking it down and to validate for people who are not finance minded like me. I'm an English major, so numbers scare the heck out of me, but that it's okay to have a budget. And I love what you described, Jeff, that budgeting is a journey that you can adjust along the way, and it's okay to get sidetracked. Just remember just to keep on that budget, adjusting as you go. And
stay on that balance beam.
Yeah,
yes.
that is fantastic. I also love so you mentioned a shoe box, and I have like a Ziploc bag of receipts. I know.
I've been guilty in the past. That's why when she said that, I was like, I know.
Oh my God, I hope he doesn't say Ziploc bag, because seriously, that's mine.
I haven't done that.
I will tell you, Jeff, that's a huge step, even for someone like me, just to learn to keep them in one place, to keep them filed, so you know when it's tax time and when you're balancing your budget every month, you're not digging in the bottom of your purse or going through old bags. So, baby steps, right?
Exactly.
You got it.
Well, thank you once again, Chris and Jeff, and thank you to TCU for its sponsorship of the Professional Lecture Series presented by the PHM Education Foundation. I thank you for joining us today and hope that you learned some great financial tips.
Thank you.
Thanks.